Before watching the video, don't forget to subscribe the channel and enable bell notification to never miss an update from us.
Hello everyone, welcome to Entry. I, Deepmani Bharadwaj, welcomes you all again, and today we are going to discuss risks in banking sector, and this would be a part 1 of our lecture because there are many risks which we will be discussing, and today we are especially discussing about the credit, operational and market risks. Fine. So what is the risk? What is it all regarding? So we'll be discussing each and everything regarding it. Now this is very important for your banking examination because these questions are asked in your mains where general awareness is considered. Fine. So talking about the type of risks in bank. See, as in the very literature sense, risk means happening of an unexpected event that could cause a disaster or a catastrophic effect. So what is risk? Everyone knows that it is the happening of any unexpected event, isn't it? Now, since risk is the unexpected event that is going to happen, so it means that these things even happen in the banking sector. Now, how these can happen in the banking sector? So we must have heard of the saying that banking has been collapsed. The bank has been collapsed. The bank is on the edge of failure or on the merge of failure. The investors are nail biting, etc. So these all terminologies are related to it. But nowadays we don't really hear that kind of news or reports because we have a string authority to regulate the functioning of the bank from collapsing, and everyone knows that which authority is dealing it so that bank doesn't collapse. Now, which is that authority? That regulatory body is RBI. So in India, the regulatory body is RBI, and this RBI, that is Reserve Bank of India, regulates all the bank in India for its smooth functioning and everything. The mechanism of CRR, that is cash reserve ratio, and SLR, that is treasury liquidity ratio, are some monetary policies of the RBI in order to regulate the banking sector from collapsing and regulate the economy there. Fine. So what all risks are there? So types of risk in banks. So there are different types of risk that are associated with the banking sector. Each risk explains different sections and functions of the banking sector itself. We can classify the major risk as the following. The first one is the credit or the default risk. Second is the operational risk. Third is the market risk. Fourth is the interest rate risk. Fifth is the reputational risk, and sixth is the liquidity risk. So in this part 1 we will be discussing about starting 3 risks. Fine. So let's start our discussion. First of all, what is credit or default risk? Credit risk, which is also known as a default risk, it is the potential that a bank's customer or counterparty fails to meet the obligation to the bank in line with terms of an agreement. Traditionally, credit risk is seen as the likelihood that a bank's debtor is unable to repay the amount owed to the bank. So which is its condition? This condition says that here bank's debtor is unable to pay the amount that is owed to the bank, which includes the principal and the interest both. One of the main activities conducted by a bank is lending. Everyone knows that. It can be in the form of loan or whatever. So when some of its credits are not returned to the bank, when a customer experiences financial problems, that is partially causing the credit risk for the banks. Now there are two variants of credit risk. The first variant is counterparty risk. This is a variant of credit risk and is related to non-performance of the trading partners due to counterparty's refusal and inability to perform. The counterparty risk is generally viewed as a transient financial risk associated with the trading rather than the standard credit risk. Now talking about the country risk. Now this is also a type of credit risk where non-performer of a borrower or counterparty arises due to constraints and restrictions imposed by a country. Here the reason for non-performance is the external factors on which the borrowers or counterparty has no control. Fine. So this was all about the credit or default risk. Now talking about the operational risk. Operational risk is the risk that is associated with the breakdown or failure of the internal process. There we were talking about the external process. Now it is about the internal process, the people and the systems. So they result from the inadequacies in the process and systems put in place by the organization. Now there are two most common operational risk. The first one is the transaction risk. Transaction risk, what is it? It is the risk that are arising from fraud, both internal and external, or failed business processes and the inability to maintain business continuity and manage information. Now the second type is compliance risk. Compliance risk is the risk of legal or regulatory sanction, financial loss or reputation loss that a bank may suffer as a result of its failure to comply with any or all of the applicable laws, regulations, code of conduct and standards of good practice. It is also called the integrity risk since a bank's reputation is closely linked to its adherence to the principles of integrity and fair dealing. So this was all about the operational risk. Now talking about the market risk or systematic risk. Systematic risk is related with the bank's assets where their values are changed by the systematic factors. It is also called the market risk and banks are usually engaged in the market activities. Market risk can be related to any prices which are continuously traded on the financial markets. The risk of adverse deviations of the market to market value of the trading portfolio due to market movements during the period required to liquidate the transactions is termed as the market risk. So market risk or systematic risk is a same thing. So we have already discussed about the three main risks. Now we'll be discussing about three other risks in our part 2 of the lecture. So in case you have any doubt, the comment section is available for you. So please do like this video and share it as much as possible. So thanking you for watching this video. Thanks a lot.